how to avoid paying double taxes as a digital nomad. So that's what we're going to be doing here today. We're going to be reacting to this content. So let's just get straight into it, right? So obviously, as a digital nomad, you want to maximize your dollars, your money by living overseas. Now, you want to know how the taxes things work, right? So we're going to be reacting to this content from Greenback Taxes, and let's go ahead and get into it. So the U.S. tax code is one of the most complexes in the world, is what most people say. So now we're going to look at some of the basics of how you pay taxes to the U.S. So most American digital nomads are required to file taxes, right? But you may not have to pay taxes. It depends. So we're going to see for each country what their requirements are. So it says that if they make over the minimum filing requirement, no matter where they live, and if they were working remotely. So the U.S. is one of the few countries in the world that uses a citizen-based tax system. That means it has a requirement to file. To file the U.S. taxes depends on your citizenship, not residence. So even if you live in another country, as long as you're a U.S. citizen, you have to file taxes. So basically, no matter where you live, you always have to file taxes if you are a U.S. citizen, right? So let's see and react to this content here so we can get some more insights and information on how this works. All right.
Hello, digital nomads.
So let's react.
This allows individual foreign earned income exclusion, or the FEIE. This allows individuals to exclude up to $112,000 of their earned income from U.S. taxation each year. The foreign earned income exclusion is indexed to inflation, so the exclusion amount increases each year. There are a couple caveats you should know about though. So first off, your income needs to be earned, so passive income will not qualify for the foreign earned income exclusion. The earned income exclusion is applied after self-employment tax. So if you're a digital nomad and you're self-employed, you're going to have to pay that 15.3% before you can apply the foreign earned income exclusion.
So basically what he's mentioning for the foreign earned exclusion is like you can basically exclude income. Also, you can use income for even when you live overseas and when you travel, any bills, anytime you spend money in the country that you're living in, you can use that as a tax write-off, right? You just add the full amount together and you can use that in exclusion. He mentioned the dollar amount for the foreign exclusion is $112,000, right? So let's just keep reacting to it and let's see what more information we can learn.
Lastly, your income needs to be earned outside the United States or inside a foreign country. So if you're working in the US for a couple months and then you're overseas, the income you earn in the US will not be able to be excluded. To qualify for the foreign earned income exclusion, you need to meet one of the two following tests. You either need to be physically present inside a foreign country for 330 days in a 365-day period, or you need to be a bona fide resident, meaning that you've lived abroad for a full calendar year. You have no plans of moving back to the United States. So if you qualify for the foreign earned income exclusion, then you might also qualify for the foreign housing exclusion or the foreign housing deduction. The exclusion is for employees, the deduction is for self-employed individuals. And we have videos specifically on both of those topics if you want to check them out. Basically, the way it works.
All right, perfect. So I guess I can go more into that for the self-employed, because I know we have some self-employed individuals that either watches the channel or you may be new to the channel. So I'll definitely look into that and we'll do a reaction video and we'll upload it right after this one, right? So let's just go more in detail on what he basically mentioned. So if you're an employee, if you live outside of the United States for 330 days, you can apply and actually qualify for the foreign exclusion. So that means you'll be excluded for up to $112,000, right? Yeah, you're not basically paying double taxes. So now we're going to see what countries you will have to pay state taxes in, right? So it says certain digital nomads may have to pay taxes, may have to file depending on what state they resided in or how they recently left. Typically, you will only need to file a state tax return if you lived in that state for a certain amount of time during the tax year or earned income there. However, some states are notorious for trying to maintain tax jurisdiction over their former residents. These states include California, New Mexico, South Carolina, and Virginia. So if you live in these states, you have to pay state taxes, right? California, New Mexico, South Carolina, Virginia. So if you moved out of these states, they may impose state taxes on you. If you have a driver license there, you have a spouse or children living there, your vehicle's registered there, you're a registered voter there, you have a bank account open there, you own property there, or you maintain a mailing address, right? So now I mentioned just going in on detail why some of these things happen. So it says, because of these complications, some digital nomads who originated from the states will temporarily establish residence in another less difficult state before traveling abroad. Once you've left the country, it can be very hard or even possible to erase your attachment to a state like California or Virginia from overseas. So it says if you want to use this strategy to avoid paying state taxes, then remember that some states don't pay state taxes at all. So these states that do not pay state taxes include Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. So these are the states that do not pay state taxes, right? So it says just to make sure to check that whenever you're looking to become a digital nomad. So now it talks about self-employment taxes here. We can go into it a little bit. So it says most digital nomads are self-employed. So as they are liable to pay the U.S. self-employment tax, which is 12.4% for Social Security and 2.9 for Medicare. So that's around 15.3% of your income. The self-employment tax also cannot be excluded through the foreign earned income exclusion. So that's what it was called, right? Foreign tax credit, or FEIE, foreign earned income exclusion. However, some countries have international social security agreements within the United States. If you lived in one of these countries, you may be exempt from the self-employment tax and only subject to the social security tax for the foreign country you live in. So the IRS tax code is around 7,000 pages. That's what it looks like, right? So do digital nomads have to pay foreign taxes in foreign countries? Now it says if digital nomads must file a U.S. federal tax return, even if they live in a foreign country, do you have to pay taxes to the government of that foreign country? That would depend on the tax policies in places in whatever country you are living in. While the United States is a citizen-based system, most countries have residence-based or territorial-based. So residence-based taxation means that the country taxes all income earned by residents within their borders. So this was established, and it says the definition of a resident can fluctuate from country to country, but usually means spending at least 183 days in that country. Territorial-based taxation means that the country taxes only income source from within their borders. So these are the residence-based taxations. The most common systems with over 130 countries includes most of the European Union, Canada, Australia, China, Japan, Mexico. Territorial taxation is less common, but still used in quite a few countries, such as Costa Rica, Hong Kong, France, Singapore, Paraguay, Panama, and Thailand. So what tax deductions are actually available for digital nomads? So there are three. The biggest three are the foreign earned tax exclusion, FEIE, is what we're mentioning in today's video. There's the foreign housing exclusion, and then there's the foreign tax credit, right? So we're going to go in on each one. So it says the foreign earned exclusion is a tax benefit that lets expats and digital nomads exclude a certain amount of foreign earned income from taxation. U.S. taxation. The exact number from year to year, but for income earned in 2022, the exclusion is 112,000 for earned income in 2023. So for 2022, the exclusion is up to 112,000, but this year in 2023, it's increasing to $120,000, right? So the FEIE applies only to earned income, including salary, wages, bonuses, commissions, self-employment income, professional fees, and not to be unearned income, such as interest, dividends, pensions, social security payments, capital gains. The FEIE isn't an automatic exclusion for anyone living outside the United States either. To qualify the FEIE, foreign exclusion income, foreign earned income exclusion. That's what FEIE means. You must pass one of the two tests, the physical presence test, which means you have to live 330 days outside the U.S., or you have to become a bona fide resident, right, in that country. Okay, so the foreign housing exclusion. It says the foreign housing exclusion lets Americans living abroad deduct certain housing expenses from the U.S. taxes. This exclusion can only be claimed in addition to the FEIE, meaning you must first qualify for and claim the FEIE to be eligible. There are a few other requirements as well. You must have qualified housing expenses, such as hotel and Airbnb stays. Usually don't qualify. So that means you have to have an actual apartment. You must pay for housing expenses from employer-provided income. So self-employed digital nomads must use the foreign housing deduction instead, right? So your housing expenses must exceed the base amount specified for your location. Once you qualify, you can exclude up to 14% of the amount of your FEIE. For example, during the 2022 tax year, the minimum maximum exclusion was 112,000, making the foreign housing exclusion $15,680. Now, the foreign tax credit, if you pay income taxes to the foreign country in which you reside, you can generally deduct those taxes from your U.S. tax bill using foreign tax credit. That is designed to keep expats and digital nomads from being taxed twice on the same income. However, you can't deduct income that you've already excluded using the FEIE. Not all foreign taxes will apply either. To qualify for a foreign tax credit deduction, you must have a foreign tax liability that originated legally in a foreign country, is assessed on your income, is imposed on you as an individual. All right, so now it goes in on the type of test. What is the physical presence test to qualify for the FEIE? And by extension, the foreign housing exclusion. Digital nomads must pass the physical presence test or the bona fide residence test. So, how exactly do these tests work? Well, within the presence test, since it's the easiest one for digital nomads to pass, all they have to do is basically spend more than 330 days outside the US during any 12-month period. Right? You can spend those 330 days in a single foreign country or several, though you must be in the country legally. So, the bona fide residence test is more complicated, and the physical presence test is much less likely for digital nomads to pass. So the bona fide residence test requires that you are a U.S. citizen, a resident alien living in a country that has a tax treaty with the U.S., maintains a residence in a foreign country, live within that country for an entire tax year, usually January 1st to December 31st, have no plans of returning to the U.S. in the foreseeable future. As you can see, the bona fide residence test requires that you occupy a single foreign country for at least one entire tax year. While an expat may meet these standards, digital nomads rarely do. What forms do digital nomads need to file, and when are they due? So the tax forms that digital nomads must file can vary widely depending on the circumstances. In some cases, trying to keep track of what you are and aren't required to file can feel overwhelming. To help simplify things, here's some of the most common tax forms for digital nomads. IRS Form 1040, Individual Income Tax Return, is your personal tax return. Virtually all U.S. citizens, including digital nomads, must file this tax form. The due date to file the 1040 is generally April 15th of each year, April 18th in 2023, though you can apply for an extension in certain situations. So the IRS Form 2555, Foreign Earned Income, to claim the FEIE and foreign housing exclusion, you must complete the form 2555 and attach it to your form 1040, because this form is always submitted with form 1040. It has the same due date, April 18th. A simplified version of this form is the 2555 EZ. Is available for certain digital nomads to use simplified form. You must have no self-employment income, have no business, have no business or moving expenses, not claim the foreign housing exclusion or foreign housing deduction. All right. So now the next thing that we're going to mention is the foreign tax credit, individual estate or trust. So it says the form 116 is used to claim the foreign tax credit, like form 2555. This form must be attached to your form 1040 and submitted at the same time. The FinCEN report 114, report of foreign bank and foreign accounts, FBAR. Any U.S. person, including digital nomads, with more than a combined of $10,000 in a foreign bank is required to file the FBAR. The form is filed separately from your Form 1040, but does have the same standard due date, April 18th. However, if you miss that deadline, there's an automatic extension to October 16th. Either way, this form must be filed online and sent directly to the Financial Crimes Enforcement Network, FinCEN, not the IRS. The IRS 8938 statement. It's a statement of specified foreign financial assets factor. If an expat, digital nomad, or other U.S. person living abroad owns foreign assets with more than a certain threshold, they must file the 8938. For digital nomads filing their taxes individually, that threshold is $200,000 at the end of the tax year, or $300,000 at any point during the tax year. For digital nomads filing a joint tax, the threshold is 400,000 at the end of the tax year or 600,000 at any point during the tax year. However, the thresholds are much lower for digital nomads not considered to be living abroad. In that case, the thresholds are reduced to a quarter of the amounts listed. Please note that the standard for living abroad is the same as the qualifications for the FEIE, foreign earned income exclusion. If you are able to pass the physical presence test or bona fide residence test, the IRS will apply the reduced thresholds for the Form 8938. And if you currently reside outside the U.S., the form is filed with your Form 1040 and has the same due date. All right, so now it just mentions that you can get some tax help if you go on this website and click on it, right? You can get some tax help from them. So I would definitely talk with whoever your tax professional is if you're looking to live outside the U.S., either long-term as a resident, or if you just want to get the presence test, it's probably best to live outside for those 330 days. All right, so that's pretty much everything. Like the content. There's going to be more videos. Subscribe for more content like this.